All right, everyone. Let's talk about the RBA decision we are having. Almost midnight. It's gonna be here because it's releasing at 11:30 p.m. Atlantic Standard Time, which is almost a midnight. And probably I'm not going to be trading this event. However, I thought like why not to go a little quick preview about how the bank. Uh, how the Reserve Bank of Australia, if it can give us some tradable opportunities. So starting with the cash rate, market is widely expecting that it's going to go for 25 basis of cuts, and alongside that we're going to have RBA statement. And the thing we need to keep in mind that RBA monetary policy statement is gonna get released, which gonna get which of most of the time gets released quarterly. That is their fixed time. Once in a quarter, they release their monetary policy statement in which they give us the projections uh, about what they think that we're gonna their economy's GDP might land year ended, including unemployment rate, CPI inflation, trimmed mean inflation, and also they give us a little bit insights on where they think that the cash rate will be by the end of each year. So uh, starting starting with the last starting with the last monetary policy statement, which eventually we have had it in the 4th of November 2024. In that, the bank actually forecasted that the GDP will land around about 1.5 in December 2025. For the projected 2.3, which was lower. They lowered it from their previous projections. Same thing goes with the unemployment rate. They increased it in for December 2025 for December 2026 compared to their previous policy statement. CPI inflation, they think that it will come down, but I think the inflation is quite tricky to handle. Let's just have a look where the Australian inflation is at right now. Okay, so let's open up our free resource and Australia. It is at 2.4%. So if we look, so it is at 2.4% right now. Okay, so where is it? Australia, right here. 2.4%. So right now, if we just go to their forecast, they stated that in December 2024, which was last year, they expected that the inflation might land close to 2.6%, which is above the inflation currently we have right now. So now they are still thinking that by the end of June it can go to 2.5%. So it's almost there. So we are not worried that inflation is going out of their control. With that being said, we are having a GDP sitting at 0.3%. That is for a quarter of quarter. And for year of year, I think it is at almost 0.8%. And they expected, so sitting at 0.8%. So they have expected that the GDP might land by the end of December 2024 at 1.5%. So it, which is way below than than the market have, than their own projections. So with that being said, we are clearly looking at any changes they make in this clearly make any change in their projections. And widely I will be more focused on the cash rate, what they have to say about their cash rate. And of course we'll be looking any reasons in GDP and unemployment rate or in CPI inflation reports. So let's move to the last RBA rate decision we had. They maintained their cash rate by 4.3% as expected. It was most of okay this season. We didn't get much out of it. So right down I have wrote it quick summary: easing upside risk to inflation, more subdued wage pressures, and mixed economic activity data softer than expected. So overall it was slightly more dovish stance on inflation, or a huge shift, but sounding less stressed about it compared to the prior statement. So what we are looking in the current cash rate scenario. So I have three scenarios. Of course, we always keep these three scenarios in our mind. First, it going in line with the market expectations, with not changing much of in the monetary policy statement. Second scenario we can have is that they are decreasing their rates by 50 basis point of cuts, clearly surprise the market with giving us a lot of dovishness in future guidance. And the third scenario, which is going to be my favorite one, is holding the cash rate as it is and sticking to hawkish bias, which eventually give us a really nice upside in Aussie dollar. And follow that if we get on Wednesday a nice employment change or unemployment rate labor data, which we if we get really nice labor data out of from Australia, I mean it's gonna be great for us. So let's have a look at the chart we have. So here is the Australian and US dollar chart. I think I have already spoken about it, that it is sitting at nice this trend line, and that huge resistance. Where is this one? Let's just go for a higher time frame. Okay, so this key area is very very important for let's just say having a bias of upside. So if this level of interest zone gets break up, and if it breaks this trend line, I think I'm very convinced to get long on Aussie side. The last but not least, I think this is gonna be very important to keep in mind that there are still tariff concerns going on in the market, especially the reciprocal tariffs. Trump is still not hesitating himself from retweeting those things that he gonna implement those reciprocal tariffs. It's just like dollar for dollar. I think that's the scenario he want to go for. Anyway, we will see what happens, and of course the best scenario is that if we get a hawkish outcome, and the other two ones I'm not very convinced to let the short the Aussie. I'm more convinced to buying on a good print, or let's just say good monetary this season. So with that being said, that was a quick preview on RBA rate decision, and just don't forget that after that we also have some of the RBA decision, economic events happening on Wednesday. Don't I'm not seeing anything special getting spoken by Block. Uh, let's just say when he was the last time spoken about it. So it has been a while, and clearly I think Bullock haven't given us anything to work with. So I'm probably thinking that this time it's gonna be nothing burger. So that's it. That's the quick preview, and if you have any questions, don't hesitate to let me know.